Now let's discuss about a depreciable amount. What do we mean by depreciable amount? So depreciable amount is that portion of the cost of the asset or cost of the PP&E that we are going to depreciate. Now, what's the difference between the cost of the asset and the depreciable amount? The amount of a residual value. The residual value impacts the depreciable amount. Now, how depreciable amount is computed is you take the original cost of the asset, the total cost of the asset minus the salvage value that you're going to obtain at the end of the useful life. At the end of useful life, you will get a net balance. That is what we call it as depreciable amount, because this is the amount of our resource that we have spent, and this is what we're gonna get after the retirement. Which means, suppose if I spend $100,000 and I'm gonna get $10,000, which means the total outflow of resource is $90,000. We will depreciate $90,000 over the useful life of the asset. Now, one thing it's very important to understand is that the residual value is the amount that the entity would expect that it would be able to fetch from the disposal at the end of its useful life, and it is required to be estimated at the date of acquisition and subsequently reviewed at each reporting period. Which means, suppose acquired the asset on 1st January 2018. On this date, you need to estimate what you're gonna get as a salvage value when you're going to retire the asset, for example, after 10 years. After 10 years, when you're going to retire the asset, this much amount of money that you will receive, the net amount is depreciated over the period of time. Again, you will re-measure or re-look into the salvage value computation and at each reporting date. At each reporting date, you will look into the salvage value estimation and see if the estimation is appropriate or not, or if there is a requirement for the change in the estimation. If there is a change in the estimation, it's a change in the accounting estimate, and change in the accounting estimate is dealt prospectively. Change in the accounting estimate is dealt prospectively, and the accounting will be done on a prospective basis rather than a retrospective basis. We will discuss this point through an example.